Good morning and welcome back to Almus Market Mornings. I hope everyone enjoyed their long weekend because the markets clearly didn't. As the Indian markets reopen today, we're walking straight into a storm of dollar weakness, a sharp sell off in the Japanese bonds, and a growing sense that the global debasement trade is very much alive as we head deeper into 2026. All this unfolded just as we were on the brink of breaking 92 on Friday for the dollar rupee. So let's see where we stand today. Good morning, JK. How do you make sense of everything that's played out over the last 4 days and what really matters as we step back into the markets today?
Good morning, Eshan. Um, yeah, I think as markets have actually diversified their focus from economic data into what's happening in the geopolitics and also the strategic realignments that's happening across the globe. Uh, so the numbers from various countries that were seen, there were plenty of them, in fact, on Friday, and that did not have much influence on the dollar. We had the UK retail sales rising very strongly, coming at 0.4% versus minus 0.1 expected. The Michigan final reading in the US came stronger than the initial reading, and inflation expectation was also lower. PMIs grew across the regions, Europe, UK, and even India. And the good part is that the manufacturing seems to have picked up in most of the regions, and that's also possibly another reason why the base metals have been rising. So, but as I said, these numbers have mattered little for the markets because there's a lot of focus on what's happening in the geopolitical scenario. Uh, After the Trump's Davos speech, where he said that he's not going to use force to cede the Greenland. However, he did say that there was a framework of an agreement that's being worked out. At the same time, Europe has not made any statement in this regard of any agreement. On the contrary, European Parliament has suspended work on ratifying the trade deal that they had, come to an understanding with the US earlier in 2025, and this is possibly, in a reaction to possible imposition of tariffs on European goods by the US on related to Greenland issue. We had also had Trump threatening Canada with 100% tariff over a new deal that they are signing with China. China is making a lot of concessions for imports from, Canada is making a lot of concessions for imports from China, reducing their tariff substantially, while China is also reciprocating to some extent. Uh, so Trump has said that he's raising tariffs on China because of this. He's also said that he's raising tariffs on South Korean autos due to the delay in signing of trade deals. In the meanwhile, Europe and India, are also signing their agreement, something which is called as mother of all trade deals. And this, of course, will take some time to implement, but it's a good positive development coming, in the wake of delay in signing of a deal with the US. And we also have, the EU signing a deal with the Latin American countries earlier in this month, which is called the Mercosur deal. So Europe is moving ahead with its own agenda of trade relations with other regions, and more distance it appears from the US. And in fact, there is a sense that the NATO's cohesion may be weakening in the coming months. So these are the reasons why dollar has actually got weaker. Investors have been seeing buying euro afresh, which has actually gone very close to the 2025 high at 1.1920, although it is slightly below that right now, waiting for the next trigger. Dollar's weakness was also triggered due to possible rate checks by Bank of Japan on the FX market. After Bank of Japan held rates steady last week, although market would have expected, or rather, economic reason would have should have prompted them to hike rate, but they did not, and the market sold yen immediately and went above 159. And since then, rumors of rate checks, which is something called like an a stealth intervention by Bank of Japan, led to dollar yen falling, and it fell further on rumors that even Fed had checked the rates. So these are seen as uh, you know preliminary action on intervention, something that the market is fearful of for quite some time. However, so far no actual intervention has been seen. Market data from BOJ has also not confirmed that there have been actual intervention of selling dollars by Bank of Japan. So overall, the dollar has weakened. In fact, we have seen also a host of commodity currencies like Canadian dollar, Australian dollar, and New Zealand dollar gaining in recent times. That's actually on the back of rising commodity prices. UK, after good data, the pound has also kept stepping step with the euro and risen to new multi-month highs as well. Japanese yen, of course, awaits to see whether there is going to be actual intervention or not. Overall, dollar index is now trading closer to 97, just one big figure away from the multi-year low that was seen last year at 96.20. I think now what the market is looking ahead to is, apart from the geopolitical developments, the Fed rate decision, which is due tomorrow, although they are not expected to, change the rates. Statements from Fed chairman will be very closely watched. Also, in the wake of a recent, Powell statement on pressure by the government on the Fed, it assumes a lot of importance what kind of statements he makes, whether he holds on to the objective stance of, managing the dual mandate that is given to the Fed, and that's very much in the focus of the market. If there is a touch of hawkishness, dollar could retrace a bit, but I think the underlying trend for the dollar is definitely weaker. In the meantime, Rick Reader is seen to be frontal in the race to replace Powell when his term ends in May. And one of his statements where he says that it is ambiguous to me whether a higher interest rate actually helps bring down inflation. So indirectly meaning that they probably, if he comes into the position of Fed chairman, rate monetary tightening may not be adopted for cooling down inflation if at all seen. Yes, that's a huge statement, but of course we just still have to wait the final appointment. As far as the rupee is concerned, we almost knocked on the doors of 92 on Friday, but held off a break due to some reported selling by the PSU banks. Market itself has been hesitant, to buy the USD INR above 92 as we head into key events of the India budget, then India EU trade deal, as well as some indications from an US official, which said that India's import of oil from Russia has dropped substantially after the penal tariffs, and which some people read as paving the way for progress in the trade deal. I think rupee will consolidate a bit after rising a lot. 5% rise in the dollar in our last year, 2 to 2.5% rise in the same in this year as well, which is a very large moment so far, particularly viewed in the context of the dollar index itself has been on the decline. Anything above 92 towards 93 looks to me to be overbought zone. And we also had RBI taking a huge liquidity measures. It has plans to infuse as much as 2.3 billion dollars, almost 2.1 lakh crores of liquidity through reverse repos as well as fresh buy sell swap operations. That could give some confidence to the market and remove the money market tightness, which was looking to keep the yields also higher. So if not some great relief, some sort of a consolidative mood can come into the rupee for the time being, and awaiting fresh triggers in this regard. Thank you.
Thank you, Jairam. So, and just to summarize, markets have diversified their focus from economic data, which came on Friday, to everything that's been happening with regards to the geopolitics and the structural changes that we've been seeing. New tariff threats have been seen from the US to Canada of 100% if Canada continue to make their deal with China, and also increased tariffs on South Korea autos due to the delay of signing their major deal. And rumors of rate checks and intervention by the Bank of Japan dropped the yen from 159 to around 154 levels, with the market staying fearful as these are still just rumors and no such intervention has been seen so far in the market. And when it comes to the dollar rupee, we are closer to 97, one big figure away from the multi-year low. We also have the Fed rate decision tomorrow, expected to keep the rate steady, but the statements and the sentiment by Fed Chair Powell will be closely watched. And when it comes to the rupee, we almost knocked the doors of 92 on Friday, but we saw some intervention by the RBI holding the fort of 92. And of course, the dollar weakness over the weekend made it come down over in the offshore markets. So let's see where we open today. Thank you all so much for listening. I will catch up tomorrow with a fresh round of updates.